Hang tight, Michael. On Friday, we did get those reports that Qualcomm supposedly made a takeover approach to Intel in recent weeks. As the dust settled over the weekend, neither company has commented and no deal is in place. Bernstein is out with a new note saying they find it hard to see a deal working out financially for both companies, given the number of risks and uncertain returns. Joining us, the author behind that note, Stacy Rasgon, is Bernstein's U.S. senior analyst. And Daniel Newman is here as well. He's the CEO of the Futurum Group. It's great to have you both along. Stacy, your thoughts here. If not Qualcomm, then what for Intel?
So what I said, by the way, was I don't see a deal working out if it includes the fabs. That's the issue, because the fabs by themselves, I mean, they're losing a bunch of money. They require a ton of capex. If you have to support those investments, I don't see a deal getting done with cash that doesn't drive leverage to like unsustainable levels. And if you do a deal with stock, it's massively dilutive. I just don't see it working out. And I don't know that I see a deal without the fabs is the problem, because what do you do with them?
What do you do with the fabs, period? I guess that becomes its own question.
Well, and this is the issue that they have, that the factories, like, people have always considered that Intel might split them off at some point, which maybe they will, but you can't do it now. They're losing $12 billion a year. They can't stand on their own. At the same time, I don't think you can sell them to somebody else to operate, like a TSMC. I don't think TSMC or anybody else wants to run their factories. And while hypothetically, I think you could have a scenario where you just scrap them, like you sell the tools for whatever they're worth, you go whole hog into outsourcing. I don't think that's a politically viable situation right now, and you'd have to scrap the entire roadmap the way it stands. And like, long story short, Intel's having enough issues with it. Why would Qualcomm be the one to make the fab issues better if they're going to keep them? I just don't see it working out. And I'll be honest, for Qualcomm's sake, I would not want to see them do a deal with Intel that includes these factories. I would not want to
Daniel, let's turn to you and get your take on whether a deal is plausible here. Do you agree with Stacy or not? And number two, the question of the fabs. Well, isn't that what the CHIPS Act and the government says they want? They want the ability to manufacture semiconductors here in the United States?
Yeah, I agree with Stacy that this is not a probable deal. I think I said it in many ways in the note that I put out. I just don't see how this works. I do think there's a bit of darkest before dawn going on with Intel. I think they had their darkest moment. I think the Lip-Bu exit. I think the rumors on 18A were somewhat. They got a turnaround last week when you got the AWS win, when they got the $3 billion from the DoD. When they did make the decision to separate the P&L fully and actually spin off a subsidiary, I called that a step function towards a possible spin out in the long run. But I think these are the steps that Intel need to make. And I think they may have actually seen the worst. And I know maybe this makes me an optimist. And Stacy, you and I have had this debate before, but I actually think this could be the darkest moment. It's actually moving in the right direction, Tyler. And somewhat, I think this has been good news. Now the Apollo news becomes much more realistic to me.
Gentlemen, not to forestall that debate, but we're getting some breaking news out of Boeing and its latest offer to end their worker strike. Phil LeBeau has the details. Phil?
Kelly, the Boeing says this is their best and final offer to the machinist union that they have now advanced. 4 main points here. First of all, the wage increase, which was 25% over 4 years. The company is now increasing that offer to 30% over the next 4 years. They will also restore the annual bonus that was not in the previous offer. They will have a signing bonus that doubles to $6,000. Previous offered was for a $3,000 signing bonus. And Boeing will increase its 401k contribution to the machinists. There is one last note. This offer is contingent upon ratification by 11:59 Pacific time on Friday. So there you have it. Boeing says this is their best and final offer. The main point here, 30% over the next 4 years. As you guys know from our time out in Seattle, we heard time and again from people on the picket lines, we want 40%. Is 30% enough to get it over the threshold? We'll find out. Back to you guys.
And Phil, just quickly on that note, some analysts are watching Textron, where they offered 26% wage hikes, $3,000 bonuses, $1,500 COLA, health insurance, 401k enhancements, and just over the weekend, employees rejected the contract and voted to strike.
Look, a lot of organized labor unions, the unions, whether it's in aerospace, whether it's in automotive, they believe that this is their time to push the companies as far as they can. And in the case of Boeing, they believe it's 40% over the next 4 years that they deserve, not 25%. We'll see what they have to say about 30%. Just for some context, guys, 95% of the workers rejected the last contract. So if you're Boeing, you've got to go from 5% who accepted it up to 50% who accept it. That's a high threshold relative to where they were a little over a week ago. Let's see what happens now that the machinists have this offer.
All right, Phil, thank you very much. Phil LeBeau reporting the latest on Boeing there as we turn to kind of its troubled sister or cousin in tech, which is Intel. And Stacy, I don't know if you want to respond to what Daniel said, that maybe it is darkest before the dawn for Intel, and maybe Apollo does now come in with a much-needed cash infusion.
Well, again, I don't think they need the cash infusion. Maybe I'm an optimist here, but I actually don't think they're desperate for cash. If you add up the CapEx cuts and the OpEx cuts and the dividend suspension and the private equity, they've already got a deal with Apollo. They sold half their Ireland fab to them for $11 billion, and the Brookfield money and the government subsidies. It's like $40 billion of incremental cash onto the balance sheet by the end of next year. I think their cash balance is actually okay. So I don't know. And I'll be honest, I may just be pessimistic here to Daniel's optimism, but I don't think you want to take private equity money unless you absolutely have to, right? Like you're not going to. Those guys are not billionaires for no reason, right? Like, you're not going to get the best thing for them. You don't want to do that sort of thing, I think, unless you have no choice. So I understand the whole idea. It's a vote of confidence. I mean, fine. I'd rather see them get along without actually having to take funding from private equity. So I don't actually know how good of news that actually is.
Michael, your thoughts here on Intel and a possible combination?
Well, it's a bit more in the weeds than I focus on. But I think, when we have this backdrop of a soft landing, plus rates coming down, I think you'll start to see more opportunistic value-searching investors look for deals, and I think there's opportunities there, and I think some of the banks that are doing those businesses can also benefit as well.